Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. Today, special guest, Professor David Halliday. Professor Halliday, welcome to the show, and thank you for being on here. Could you please introduce yourself for our audience?
Absolutely. Thank you, Rodney. I'm David Halliday. I teach business strategy here. I teach, mostly MBA students, but also undergraduates and master students. In my career, I did a bunch of things. It was a very circuitous route to get here. I was a video editor for years. And as luck would have it, my last job in video editing, somewhat not coincidental, was for a business news show.
Oh, wow.
And that show went bankrupt. This was 2008. Everything was going bankrupt.
Yeah.
And my boss gave me a piece of advice. He said, go get your MBA. You're really good at this stuff. And so I did.
Wow. Transformative.
Transformative.
That was good advice.
It was. And I went to, got my MBA. I worked at a hedge fund. That blew up as well in the European debt crisis of 2012. So I found myself in a PhD program, loved it. And when I graduated, I got a job offer here and accepted instantly. I was very excited to move back to DC.
Excellent. And so just a little bit more on the topic of GW School of Business. So why did you choose George Washington? Why, it sounds like you were in this PhD program. Obviously, you're then making choices about where to go. It sounds like there's some connection to DC. Why GW School of Business?
Well, the answer isn't going to be nearly as interesting as you're hoping for here. I had a job offer from Pepperdine.
Okay.
Which
Beautiful
sounds,
place.
yeah, exactly.
Beautiful
They offered
place.
me an office overlooking the Pacific.
Oh, that's pretty good.
Yeah. I mean, on any of these bad days here, I think about that one. But at one, they didn't treat me as a career path hire, as someone that they would commit to if I committed to them. And GW, from the minute Howard Beals gave me the job offer, it felt like they were offering something to me and I was committing to them. And hopefully we've grown together over the past 8 years.
Well, I'm delighted that you're here at the GW School of Business. And I know students give you good ratings and you're a very popular professor and have achieved awards in that category. So thank you, Professor Halliday, for your service at GW. All right, so now we're going to get into some news here, or let's say some business. And so this is Market News with Rodney Lake. So we like to talk about business. And one of the areas that you've done quite a bit of research on is the grocery industry. And I think a lot of people, maybe have misconceptions or they have their ideas and they think that, okay, whatever I experience at whatever the grocery store that they go to is maybe the same everywhere. And probably for some things it is. But I think there are some things that we can help people better understand about the business of a grocery store on today's episode. So, first of all, why the grocery industry? Like, why should people be interested in this?
That was my question. Every strategy professor teaches a grocery industry case.
Oh, interesting. Okay, I didn't know that.
Well, at least all the ones I do.
Nice.
I do. Usually it's an airline and a grocery industry.
Got it.
And I came in saying, I'm not going to be that strategy professor. The grocery industry and airline industry sound very boring. And yet my two favorite cases today are Trader Joe's and Southwest Airlines.
Nice.
And the more I've studied them, the more I've gotten interested. I mean, business, to some extent, at least on the academic side, occasionally feels like a game. We have to understand, where does that profit come from? How do these companies reinvent themselves? Where do they invest? And with the grocery industry, it's tangible. It's easy to understand. I'm doing research there.
Yeah.
If you're listening, I'm making little air quotes right now. Research there every week. I hate shopping, but when I'm there, I'm thinking, I'm trying to figure out this game around me.
Right.
What about the consumer packaged goods? What about the fresh produce? What about the meat and dairy aisle? And I found that there are a lot of different business models. I only expected there to be one,
Right.
which is how you introduce this. I'm going to buy milk. I'm going to buy apples.
Right.
But there are at least 6 categories of business models.
Which I think would surprise a lot of people.
It surprised me. And I think I literally have a pin mark here because I had 5 written in. And then I thought about, well, what Whole Foods is doing is just unique enough. I'll add in 6.
Nice.
So increased just in the past 20 minutes.
It's expanding rapidly.
That's right. At this rate. So we've got Walmart, Costco, Trader Joe's, Aldi's, and then of course we've got the film bad guys, the industry generics like Kroger and Albertsons, and all of those have those distinct
Right.
business models. So this is great for my students. Students come in, they're hesitant to discuss business fundamentals, but with groceries, if we're talking about milk or eggs, I can get them to talk about COGS, cost of goods sold, and SG&A,
Yeah.
selling general administrative, the overhead costs. And with groceries, they're willing to buy in a little bit. They'll
Right.
bite. If I mention finance in some other terms, they'll, leave class.
Right. Glaze over.
Yeah,
Move
absolutely.
on. Move on to TikTok,
Yeah.
Instagram.
Yes, the volume on the laptops goes up.
Well, I think, look, one thing I think that's interesting is that this is super topical. Obviously, this was a big part of the last election is inflationary prices experienced at the grocery store, which virtually everybody that shops for food experiences. And so you mentioned some of the major players there that are in the industry, and I think people would recognize all of those major players. Could you maybe now talk about some of the trends in the grocery business? I think a lot of people, as you mentioned, probably, their experience of whatever they buy, they don't necessarily think about, well, where's this going? That there are 5 different business models that these people are deploying. And I would say that most people probably don't even understand, unless it's really in your face, about that there's a distinction between these business models. So maybe you could talk a little bit about the major players and the models that they have, and then maybe talk about the trends.
Sure. And let me even give you a high-level industry look first.
Sure, perfect.
Because the fascinating story, we're talking about market news.
Yeah.
The news this year is the level of concentration in the industry.
Right.
So is the inflation demand side or supply side? Are the companies pushing their prices, the inflationary prices through to the customer, or are they able to do that and increase their overall margin while doing so? And what we find, if we're looking at this from an economics perspective, it's not obvious to me. It does seem that it's a highly concentrated industry that could justify even higher profit margins for the current players, because we're looking at somewhere between a 55 and 80% concentration just for the top 4 companies.
Wow.
And I've done my own numbers. I've looked at Statista, gone up, bottom up through the industry, but we have a fairly wide range. But either of those, 55 or 80, are still very
high.
Yeah,
right.
They're very concentrated. Not quite tech, but it's in the neighborhood.
And far more concentrated than it probably was 20 years ago.
Far more. In fact, the Herfindahl-Hirschman 30 years ago is up 500% today.
Yeah.
So
and I think anecdotally, people would think about that because a lot of the mom and pops, which is part of the criticism for some of the bigger players, are gone. And at the expense, of the consumer having those options, this concentration. But it seems like also because it's a difficult industry in some ways, the profit margins, the net margins tend to be lower.
Very low.
It really does drive consolidation.
Yep.
And back to the industry.
Back to that's it. That's my next line, was low margin. I mean, we're looking at 1.3% margins for the industry. It's razor thin. And so 1.3 for Kroger, 1.2 for Albertsons, 2% for Ahold Delhaize, which is a Food Line parent company. Aldi, only 1.4%. Costco, 3%. Rumors have always been there that Trader Joe's has a 5% margin, something like the golden goose of
Right,
the
exactly.
grocery industry. Seeing these now, I think 5 may be a bit high. But
Seems
let's say
high.
if they had 3%, they would still be industry leading up there with Costco. So
I don't have any vested interest in saying this, but Trader Joe's is my favorite grocery store.
what's your favorite product?
Favorite product? I don't know. There's so many good products at Trader Joe's. The mango bars are probably the current favorite.
Yeah, everybody has one. If you go back enough, you have one. And,
Well, again, thanks. And I think one of the things that people don't necessarily think about is, if they're not connected to it, if they know something about it, they might know this, that the profit margins are quite low.
Yep.
And I think when people think, okay, well, there's these inflationary pressures, well, these people are not making a lot of money at the net level to begin with.
Nope.
And so trying to pass these things along can be very challenging, because the way that the consumer feels it is, if it's a direct pass through and they're maintaining their margins, well, they're feeling that price, 100% of that price increase. But if the grocer decides, hey, we're gonna try to absorb some of this, they just don't have a lot of room to do that.
No, no.
And how, so in your view, when you talk about the industry, what's been the impact recently of, for this consequence? Do you think it's driven any sort of consumer and or industry behavior that's different than
Yep.
prior to this period, or do you think that it's pretty much business as usual, and everyone's really trying to figure out how to deal with this?
We just talked about Trader Joe's, and I think the number one most interesting trend is generics. So store brand products, and Trader Joe's as a company essentially only sells store brand products.
Right.
So your mango bars
Right.
are Trader
Trader
Joe's.
Joe's.
You don't know who makes them, but they're Trader Joe's.
Yes.
Yeah, to you, to us at least. We see this with Costco. The reason Costco's margins are 3%, which is just luxurious by
Right.
industry standards, is the Kirkland brand. They have their own generic, and they're very good at managing the products,
Right.
using the Kirkland brand name and relating that to the Costco product lineup. So the classic, if you think Kirkland, the first thing my students think of is Kirkland vodka is Grey Goose vodka. So you've heard this urban legend, right?
Yes.
Everyone has.
Yeah.
It's not true. I've looked it up. I've done a taste test, but I've looked it up, and this is definitely not true. But it's interesting that it's such a pervasive
Right.
myth and urban legend.
And maybe they put it out there. I'm not saying that.
Oh, absolutely. I mean, you would see that if you could get away with it. But it just shows how if you can pull the brand out, brand value, say for Doritos, might account for 30 to 40%
Right.
of the product sales. Well, 30 to 40% margin versus 3% margin,
Very different.
very different. And so the industry trying to make those two things work, or at least in terms of making generics work, is, I think, the number one trend from the perspective internally of the companies.
Which would, just let me pick up on
Yeah.
that. So it would make sense then that some current leaders on the margin side, and we don't necessarily know exactly what Trader Joe's margins are, but it would then make sense with what you just mentioned about essentially the private label, the white label, however you
Yep.
describe it, that Trader Joe's and Costco would then be leaders
Yep.
in this because they have developed these brands, Kirkland for Costco and Trader Joe's for the whole
Yep.
store. So do you think that's the future? Is that a trend that some of these other places like an Albertsons or a Kroger or a Food Line, are they going to have to pick up on this and double down, or there's just not room for them to do that?
They want to, but they can't. These are things that need to be built up long term
Right.
and detail by detail over time. And I tell my students, we do Trader Joe's, and I really think this. Trader Joe's is in the mind of a consumer, let's say me, they're perhaps 3 bad products away from me never walking in there again. So I bought a Trader Joe's frozen spinach the other day, and I know that like what they've been selling me, it's been fine. It's better
Yeah.
than what Safeway sells me, and this time it was worse.
Oh, wow.
And I was like, okay, and I keep that running tally,
Yeah,
and they're going to
exactly.
have to impress me with a new
The next
product
thing, yeah.
before I kind of let this one go. They'll give me my money back, but that's not the point. Like I
Right.
need to feed myself,
Right,
and,
the
and my
products need to be
kids.
good.
Like, yeah. So doing that is very hard. So the companies want to do it, Kroger wants to do it, but ultimately they're not going to succeed.
Right. And they certainly don't have the history, for example, as Costco with the Kirkland brand, right? They have built that up over time. They have built the loyalty into the business model, and it's a very different setup, Costco versus a Kroger in any case. So maybe let's talk about sort of now, a little bit about e-commerce. And so that, comes up in a variety of different ways. Of course, when people think about Amazon, when people think about Walmart, when people think about now Costco trying to make some progress into this, grocery seems like a challenging area for e-commerce to be consequential just because you have the low net margins to begin with. So if you need to ship, that obviously needs to be possibly excluded and charged direct to the consumers. And some of the things can be heavy and bulky, and maybe it's very challenging to make this work. What do you see as the future for e-commerce for some of these bigger chains?
Well, it's certainly there. It's certainly a future. Costco's partnership with Instacart, about to say Instagram, with Instacart is very interesting. It has worked. That's one of the ways I buy from Costco, for example. But in thinking, say, back to the 90s, the parody of the 1990s tech boom or internet boom was it petfood.com?
Yeah.
And which was what you're describing.
Right.
Expensive to ship, low margin, heavy, labor intensive. So all the things that you don't
Right.
want. And that's structural to the industry. If you're adding on at least two layers of costs, the labor to get the food packed and then the labor to get the food shipped, plus the cost of shipping. And it's not going to be a silver bullet
Yeah.
for them to improve profitability. And yet they have to do it. It's where demand is. It's essentially like a mirror of the industry itself, just in e-commerce form. I don't think that'll change the way it did, say, for DoorDash,
Okay.
where they brought a platform model and pushed everyone around and got huge
Right.
profit margins in a tech way. And by and large for e-commerce, I don't see too many changes. In fact, one of the interesting things I see is that Amazon hasn't exactly dominated the space.
No.
They haven't picked up that many customers. Amazon Fresh is only thought to be about a $3 to $5 billion margin. I actually may be off on that, but it's not a particularly big.
And it's certainly part of their greater enterprise.
Sure.
It is not a huge driver at this point. And I
Sure.
think, and maybe to pick up on that, is that I think a lot of people expected Amazon to be much bigger in the grocery business after the acquisition of Whole Foods.
Yeah.
And it seems like, I wouldn't say stalled out, but it seems like after the acquisition, there doesn't seem to be any great synergies that they received from the Whole Foods acquisitions to the greater Amazon Fresh empire, which maybe makes the point of like, this is a tough business.
Yep.
And it's tough to make inroads. People have preferences that are their own. And I think it says something about the competitive landscape about the whole business. So I think I want to move on now to competitive landscape.
Sure.
And you mentioned earlier about the consolidation of the business over the last 20 and 30 years. And so you had this potential merger that didn't work out between Kroger and Albertsons. Could you maybe just talk about, your views on that? And certainly that would have further consolidated the business. Regulators disagreed with this idea. But maybe talk about the merger and what are your views about this potential merger?
Sure. It's interesting. This merger, which was regressive in almost every way, it was to say, hey, we'll create concentration in the industry, we'll reduce competition, we'll simply combine two big box companies that are not quite mirror images of each other, but pretty close. And it turned out to be the best thing for all the competitors. So Aldi will have started this time period from 2 years ago at like 6% of market share. By 2028, setting up the plans that they put in place from about 2021, when this whole soap opera started, to 2028, they will be bigger than Albertsons.
Oh, wow.
Yeah, I can't like stake my reputation on that, but every thoughtful analysis seems to suggest that. So this has been huge for alternative business plans. So Costco has done well out of this. Aldi has done well. I think even Trader Joe's has to some extent, though Trader Joe's has always been more niche and quite a bit smaller than those other companies.
So from this, and again, it didn't work out. It looks like the time spent between the two trying to put this thing together was time not well spent, and people are picking up market share. What are the options for these two companies moving forward?
It's very limited for both companies. Some of that is in their situation, and some of that is self-inflicted. So neither company is set up for innovation. That's self-inflicted. Kroger is big and they have high cash profits. So they can afford to do some innovation or invest in CapEx for online delivery or, do something. Let's say if you order from Costco, it's a 12-hour delivery window. It's entirely feasible that Kroger could do a 2-hour delivery window.
Okay.
I'm not saying that can happen, but I don't know. Conceptually, it makes sense.
If their stores are distribution centers in that way, it's possible.
And they're closer to you.
Right.
My Costco is, a solid 25 minutes away from me. So they've got to get here. And they could do something that's fairly unique with a rapid delivery model, higher cost, but faster service than what you get at Costco. Albertsons, on the other hand, they have high debt. They have high dividend payments. So meaning what little profit they do have ends up going out into dividends. So they have very low retained cash. and then poor management of low performing stores. So they've got essentially a strategy overhang of not managing their company particularly well over the past couple of years. And all of this adds up to not great options moving forward. Options are limited. I think they've probably taken a passive approach, and my guess from listening to the way their executives whine and whine, I've never seen such a whiny company in the news
Okay.
media. Listening to interviews with them, I think they want to sell, and they could only feasibly sell to a private equity company or a Hold Delhaize.
Now, do you think, which is Food Line, as we mentioned,
Yeah.
for everybody watching and listening, but do you think that another option is that an activist gets involved in this type of situation? Would that be a possibility in your mind?
Sure. They would really have to upset the management DNA of that company. If there were better management, I would consider buying Albertsons stock. There's nothing inherently wrong with the business. They close down their poor performing stores. Of course, they need to do all the things that operationally they should be doing.
Right.
But it seems like their management culture is very much entrenched in avoiding those responsibilities.
Right. Running it the way that it is.
Yeah.
Well, so it doesn't sound like they have a lot of great options. And it sounds like Kroger is certainly better positioned for the post sort of non-merger between the two companies. But now let's move on to just, let's say, future outlook for the industry.
Yep.
So backing away from this, combination, as you mentioned, others picked up market share as a result of these two probably not being as focused as they would have been otherwise on, their own market share and growing it. But what's the future look like? Do you think that there's going to be further consolidation? What do you think? Where the growth? What's the growth from the industry? As you mentioned, is it more of the specialty, Trader Joe's, Costco, Kirkland, private labels? And you talked a little bit about the difficulty there. But in your mind, what are some of the future trends for these stores, and where can they find growth? It's a big question.
That part's a big question. I do think that these different strategies will proliferate. One of the reasons, say 30 years ago or 40 years ago, as a kid wandering around with my mom at Food Line, all the stores looked the same because there simply wasn't the ability to scale these companies. Right. And so it didn't matter whether it was a Food Lion or a Safeway. In fact, there was one 4 blocks from the other in my hometown. There was just simply a management capital question that they couldn't scale. Today, any of these companies can scale. They can raise any amount of money they want to raise. They have the management teams to do it. So I think when customers want a particular thing, in the case of Aldi, that is cheap food at a decent, viable quality. Right. Not cheap food like Dollar General. It's not cheap food at the absolute minimum of quality. Right. It's cheap food given its relative quality. People want that. Aldi will grow. And we've seen that. Aldi's grown very fast in a decade. Costco is not new, but I do think their annual growth rate is enormous considering their
scale already.
Yeah, they're exactly considering their scale. So they'll stick with that. And I do think that's a continued negative. No one wants to be at a big box store. If you know what you want and you can predict it, you can deliver it. And so if these stores can do that, if they can predict and deliver and make it seamless, people want that. If not, I think people will gravitate towards the niche stores in the long run.
So picking up on this then, or to follow rather, what innovations do you think are going to come out of this? Do you think that there's going to be some innovative trends around delivery? Is there going to be some way to aggregate, your shopping cart across all these stores? Is there anything out there that you think is particularly interesting that consumers should be paying attention to?
If there is, please tell me about it. Like I said, I'm an analyst in this space, but I'm a consumer in this space, and I just want a better grocery industry. I think having, I think for companies solving this, we tend to think of logistics in terms of last mile delivery. We really have a last mile labor problem in terms of who's doing the delivery. If companies could solve that, and make all of this seamless, and the pay rate equal, and solve the just the input hassle from the consumer perspective, they'll be well positioned to succeed here. But that's not a magic bullet. There, it's simply doing something that they're doing now and doing it better. That's operational effectiveness, not a change in core strategy. So I don't see so much there. I think more along the lines of what you're thinking of. Yeah, there probably are some AI applications for on the consumer side, not on the company side to sell to consumers. I think consumers will be hesitant to take advice from a corporate AI
Right.
recommendation
Exactly.
engine, but from the consumer
Let me tell you
side,
what to buy. Right.
yeah, if you have an overlay bot that can go
Right.
and order from different
That's
places,
consumer focused. Yeah.
consumer focus, and it's yours on the consumer side, I think that would be a great thing that would massively improve the overall shopping and delivery experience.
And you could make it very
Yeah.
tailored. So if
Sure.
it's like, hey, here are the meals I want to make, this week, suggest all the ingredients and where to get it. And then, by the way, when you're done, just order it.
Yep.
And have it delivered.
Right. I don't want to buy fresh cilantro. Can you substitute something for me
Right.
and not have me go to a third store, just to, or one store? Can you get
Exactly.
it down? Yeah, that sounds fantastic.
Maybe you should build this.
Rodney, my favorite industry is the grocery store industry. I'm not prepped to do a tech play here.
Well, I think that's super interesting, and I think certainly you've given people a lot to think about. We're going to move to wrap up the show a little bit here, but before we wrap up, I just want to wrap up, let's say, the grocery industry. You're a professor in strategy. What advice would you give the audience who's trying to think about this industry, or maybe even really any industry, from a strategic point of view?
Sure.
What kind of framework should they be using?
Sure. The first thing to do is turn off your consumer brain. It sounds so simple, but it's very important. You don't like or not like anything.
Yeah.
You are there to observe actual shopping behavior. If someone buys it, they like it.
Right.
There is no editorializing there. So turn off your consumer brain, put on your analytical brain, do both quantitative and qualitative analysis. Don't be scared of the numbers, or
Yeah.
if you're a numbers person, don't be scared of the qualitative side. And so on the qualitative side, you are constantly asking what would happen if this store or product disappeared. That's called the disappearance test. Skinwatt and Rivkin. Would other companies fill the gap easily? That's a proxy for competitive advantage.
Right.
If it would be hard, like in the case Trader Joe's would have a harder gap to fill than most of the other stores. They offer a different consumer experience. And on the quantitative side, financial statements, they're your friend. Dig into them, learn one line item at a time on the financial statements. You can make it as complicated as you want, but gross margin, net income, debt, say.
Right.
Let's get started. Maybe we'll add in cash flow if we're feeling lucky.
Nice. Well, I think that's excellent advice. Anything else on the strategic side? I think that's useful to be really thoughtful, instructing people. You have to think objectively,
Mhm.
and as an investment analyst, this is certainly what we always try to do with our students. And any time we're talking about investing, is you have to do precisely that.
Yep.
It's all about what is the objective view of this business, and I think from the strategic point, that's exactly the same starting point. So that I think that's super helpful. Anything else on the strategic side that we should be aware of?
No, I mean, yes, you come take my strategy class. We've got four more strategy
14
models
more
in
weeks,
14
yeah,
weeks.
yeah.
I mean, yeah, no, I'll leave that. But I think this idea of disappearance, because we can talk about differentiation and all the things that people know, but really thinking, okay, if Trader Joe's went away, if Aldi went away, you have a bigger gap than if Safeway went away.
Yeah.
Safeway went away, you would drive to
Giant.
Harris Teeter, Giant,
Yeah.
Food Line.
Excellent. Well, thank you. All right. So now we always have to have this question, especially for GW people. What's your favorite only at GW moment?
All right. I hope I've got a good one for you today. About 2 years ago, I had a guest in my online MBA class. So a guest, his name is Igosime. He was zooming in from Nigeria, where he's an investment banker, and he'd worked on deals throughout West Africa. And
Very
the
cool.
reason I, saw his LinkedIn profile, I mean, this was like a cold intro,
Oh, wow.
was because he had felt a friend in Nigeria had recommended him, and he had helped do analysis on and do some funding rounds for GoZim, Kobo 360, Jumia. These are all big funded, famous by West African standards, tech companies, and they're all heavy hitters. And so he came, he talked to class, and I asked, just I don't know, the spur of the moment, I was like, oh yeah, you see me, I know he'd done an MBA, because he also knew a friend through Manchester through their MBA program. But I was like, where did you go to undergraduate? George Washington University. Killer resume, cold approach. I'd reached out to him. Now, he probably agreed to talk to me because I was
coming from GW.
But it didn't occur to me. I just
Nice.
said, hey, here's this guy in London, doing investment banking in Nigeria.
What a happy coincidence.
Yeah.
Stars aligning, the universe speaking for us and keeping our GW community together. So thank you, Professor Halliday, for making that happen for your students. And then now, last thing here is just any parting wisdom for our audience. Could be any wrap up from today or any other advice that you would like to share with the audience.
Sure. Like I said earlier, when I started teaching core strategy, I thought grocery stores and airlines were boring. And now they are a staple. Find me at a cocktail party. I will talk to you for hours about boring companies. But, the more I've taught them, the more interesting they've become. And, I'll expand from, say, when I'm talking about retail, I'll expand into CPG, consumer packaged goods, strategy. I'll come back to retail. I don't know, something about the simplicity, the purity and simplicity of the business there just really calms my brain down. I find it interesting, and I want to, figure out kind of the end to this, ongoing business story. So this will be true for you, not necessarily because you'll end up liking grocery stores, but you'll end up liking tech or the plumbing industry,
right? Whatever industry appeals to you.
Whatever works. Natural gas, solar panels. It's all out there. All right. Thanks, Rodney.
No, thank you. So big thanks, Professor Halliday, for making time for Market News with Rodney Lake. Very much appreciated. We'll look to have you back. Maybe we'll talk about airlines next time.
That's right.
So thank you very much. Time is appreciated. That is a wrap. Thank you for watching this episode of Market News with Rodney Lake. We'll see you back on the next episode. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.